All right. Good afternoon. Good morning, depending on where you're at here. My name is Michael Workman, and I have the pleasure of being joined today by Tyler Wheeler. We are part of the Resin Smart powered by RTI team, and we're thrilled to be back together talking about one of our favorite topics, the other F word that's going to be a theme throughout this talk, forecasts. Let's get into kind of the high level. We're here to talk about why resin forecasts break and how buyers defend them. Tyler, before we get started, man, how are you doing this week? How are things in your world?
Doing great. Coming off of a awesome MDM Anaheim show that we were at last week, talking with a lot of the folks in the resin industry, and a lot of it was about this exact thing: building resilient forecasts and looking forward to what we can expect in 2026 and beyond. So it's great seeing all the friends in the industry. Like I said, at that great show, wonderful to spend time with you too, Michael. So yeah, I'm excited to catch up on this.
Yeah, I was blown away, Tyler. We ran into so many people that we knew from roles past. And I think everyone that we ran into that you had worked for, worked with. I mean, just complimentary. It was great to see how cross functional you worked over the years, and that's going to be a big theme of today. Successful resin buyers really getting that hub of the wheel within their organizations and building forecasts that really allow that to manifest through the organization. The place to start here, Tyler, is there really are two types of buyers that have been wrong on a forecast and those who will be at some point in the future. The real question, though, that happens, what happens when leadership asks why, right? When that forecast eventually, inevitably isn't accurate. Tyler, what separates normal forecasts from something that may put your foot in your mouth from a career limiting standpoint?
Yeah, and it's really important because working in procurement, there's going to be few times where the spotlight is shining brighter on you than when you're, on the seat to deliver a forecast. Right, that's your opportunity to show competence and to show that you've done the work, and that even if forecasts inevitably break, we believe this for good reason and we have good process around it. It's really about building a system that works for your forecast than it is about being exact or being right. And it can be career limiting or it can be career empowering, right? So I think that the poor forecasts are the ones where somebody just says, what are we paying in 2026? I don't know, the average of whatever we paid in 2025. Markets are efficient, they're impossible to, shake a crystal ball and tell you exactly what's coming. So I'll stay safe and take what we did last year to what we're doing this year, and there's your forecast. And you can kind of feel in a room, the room could kind of go quiet if that was you explaining your methodology, right? Like, wow, what an opportunity you missed, right? And the better ones have systems. The better ones are addressing the procurement levers. The better ones are cross functional. The better ones are inclusive, right? It might be still the buyer that owns the forecast, but it's not just the buyer that created it. It was something that had input from multiple sources, multiple team members, and can really be defended when they inevitably change. And forecasts are made, typically once a year, and markets are changing by the month, sometimes by the week or the day. So when markets are moving faster than your forecast, it's important to be able to stay up on top of them and say, here's our methodology and here's what's changed and here's where we're headed. So there's a real wide range there on what good looks like versus not good enough.
Couldn't have said it better myself, Tyler. Just to be crystal clear, this webinar is not about predicting prices perfectly. It is about building forecasts that stand up with scrutiny, right? From your C suite, from your cross functional teams. And I want to start with what forecasts are actually expected to do, not what they, maybe are pretended to do. A lot of folks in the C suite, talk about forecasts like they're price predictions, but that's not really how you, Tyler, as a buyer, leadership actually use them. When a CFO or a CEO looks at a forecast that you developed for resin, what are the decisions they're really trying to make?
I think there's quite a few, and I think it starts at their level, right? The senior executives want to know, is my business going to be profitable, or is this business unit going to be profitable, or is this plant going to be profitable? They want to be able to use all the different inputs of forecasts, not just raw materials, but across your organization, and they want to make decisions about where they should invest or divest or push harder or maybe change their strategy. So I think that this forecast, while it's one piece of many, it's a crucial piece, especially in our industry when, the cost of goods sold can often be 40 to 80% or 70% or so of your overall uh, product costs, right? So you might have a lot of different inputs on your forecast, but resin is going to be a crucial one. So when they can see what's coming, they can better make decisions strategically. So I think that's where it really starts with the forecast. After that, you can get into some operational activities that are driven from those insights, like do we purchase early or do we carry a little bit more inventory based on what markets are doing? Or is there a place where, hey, this just isn't working out and we have to qualify an alternate if we're going to be competitive in the marketplace? Forecast drives all of those decisions. And that forecast is really something that needs to be aligned and understood across the organization. Again, finance has to agree to this. Sometimes that can be a negotiation. Operations has to see it coming, and it enables executives to also accurately do their best to forecast earnings as well, which can be really important here too. So it's really not just that a forecast is just for procurement and savings projects. It's that they're much more broadly used to provide context to your business.
And we're going to talk about this in more depth today, but when forecasts don't work or they fail, it really isn't about incomplete data sets. Especially in these days where there's almost too much data, too much noise out there. They fail because there is a lack of confidence in the signal itself, or perhaps the context isn't visible. I think the most important takeaway here is your forecast needs to be actionable. If it can't explain why, then it really is just a spreadsheet with a thumb in the air. Tyler, if you asked 10 resin buyers what drives their forecast, I would bet you, and I'm not normally a betting man, but I would bet you'd get 10 different answers. What are the inputs that are truly important? And maybe which ones do buyers misunderstand or put too much emphasis on?
So I've had to answer this question to executives in the past, and the first few times I did not do it well. It took a while to get here, but what I would pretty much say today is that there's 9 levers of resin procurement. That if you're actively monitoring these 9 items, then pretty much you're going to be seen as somebody who did the deep dive, who did the work to discover things that others weren't even thinking about. And those 9 are, and you might have to take notes because I'm going to rattle these off pretty quick here, but it's the petrochemical chain, it's supply capacity of the polymer, the demand for the polymer, supplier margin strategy, freight, the 3 T's, tax, tariff, and trade. There's regulatory, timing, and then finally rebates and credits, which sometimes can cause a little extra noise in your forecast depending on when those rebates come through and how. That's something that you really want to make sure that you have a good handle on and explain to your finance folks because they're going to make decisions off of this forecast. I think that oftentimes buyers are either distracted by or put too much emphasis on the tax, tariff, trade, and regulatory spaces. And I think often the petrochemical chain is the most misunderstood. But I think that's somewhat natural because it's also the most esoteric of all of the different 9 levers. There's data around many of these levers, some that you can get from the market, some that you can get by being cross functional, which we'll get into. Petrochemical chain has probably the most data and yet is often the most misunderstood. So if you're going to build a forecast and you were to look at these 9 levers, you'd plot them on a line and you kind of go up the value chain to the far left, if you will, and then you work your way down to the right. So from the far left, it's energy costs and feedstock prices, which make up the petrochemical value chain. A sound understanding of what levers are impacting your specific polymers along that chain, I think is essential to building even the basis of a good forecast that you can defend. From there, supply, operating rates, days inventory on hand, known turnarounds in the industry, and then also supplier margin strategy. This one's a little more nuanced. I mean, there's data and you can learn the context around the prior things. But when it comes to supplier margin strategy, that comes from really the resin buyer to say, hey, I connect early and often with my sales folks. I talk to them about what's coming and what we can expect from a price change standpoint. And having those conversations early and getting a feel for, I think my supplier feels like they have a lot of leverage in this space, and we've seen price increases in the past. In fact, we're probably due for one because we know we can't change away from this material. having that insight with your supplier and being able to build that into your forecast, it'll make it more accurate and it'll make you more credible. And Michael, I'm curious from your side as a buyer, were you thinking about margin strategy and when you were,
Yeah, I mean,
buyers?
I was don't lump me in the buyer bucket, Tyler, because buyers, you guys have a particular set of skills. When I was on the sales
Sales
side,
side.
when I was working for North America's one of their largest compounders, a very large buyer of resin, it was very much a, um, what we predicted in terms of forecasts for the raw material really would affect the strategy that we would walk into the year for, right? If we felt like we had some tailwinds with respect to raw material pricing, it would allow us to, enable maybe more competitive prices in a particular segment to go get share of wallet or to push that increase letter to try to expand margins further. That would not have been possible without a robust buying team and procurement effort that is, you know, help, developing their own forecast and what it means for the particular business. And if that's done correctly, those supplier strategies can change within the year. And we've seen that with multiple companies that have entered the year with a particular approach, maybe to get margin expansion. And then as the year progresses and it becomes more about volume, that can shift the conversation. And that all would not be possible without what we're talking about here. I'll take the baton a little bit further, Tyler. Some of the other factors that drive the resin pricing conversation for forecasts are demand. Right. If we're in the building and construction space, we all know about looking at new home starts and the government data there. We look a lot in for automotive data, new builds, new investments in the particular supply chain there. Certainly government data. There's a lot of different government agencies when they're in session, right? That you can get certain demand patterns that are germane to your industries. Building that into your forecast is important. The international trade lever, that was certainly, we saw that become a big point of conversation last year with the tariff and the reciprocal tariff dynamic. If you look at polyethylene, at a high level, the way that evolved throughout the year, where there was a period of time where we couldn't export product out of the country to the same level, right? That really had an impact on polyethylene prices. And then the additive market, antimony trioxide, we lived that whirlwind last year with its impact on the flame retardant space for Tyler, a lot of the polymers that you manage. The glass market can be dynamic at times as well. Short, chopped glass fiber, long fiber. Um, you know, maybe a minority part of the products that you purchase, but still impactful nonetheless. Tyler, I know you had mentioned that on the regulatory side, you've seen folks out, maybe put a little bit too much emphasis there. I'll let you expand on that here.
I think that, resin buyers have kind of two jobs when they talk about defending their forecasts, or maybe like two points of attack. One of them is, hey, the price changed and that wasn't in your forecast. Explain yourself. But then there's the other side of maybe nothing's happened to pricing at all, but your executive says, hey, I heard that we're not going to be able to sell PVC products in California starting in 2028. What are we doing about that? It's like, oh, okay, well, I don't know if that's exactly what, the regulations said, but in lieu of looking it up, right? Like it causes a bit of this panic and sustainability commitments as well. And certain, X% recycled material if you're going to sell in this state, right? Sometimes though that's out there and that gets pushed on to the resin buyer and you have to explain how that's going to impact your price. And oftentimes it's like, well, they announced it, but it's not enforced yet. And how many times have we seen, enforcements or regulatory policy change with administration changes or just too much of a pushback or we don't have the innovation that we need to backfill some of those critical applications. So I think that, man, that causes a lot of noise for resin buyers in their forecasts and explaining it, that I think is more noise than actually translating to the cost itself and being able to forecast accurately. There's a couple other ones, the freight considerations, substitute materials, and timing. I think each of those starts to add to your forecast to say that you've really thought about everything. But if you can get through the petrochemical value chain, really understand your supplier's margin position and what's happening for global demand, that's like 80% of it. The other 20% is to really be able to defend this from any lens or any kaleidoscope that you put this forecast through. You can say, I've really thought about it all.
To that, I love the kaleidoscope analogy. My daughter just brought one home from preschool today. That's
Oh,
awesome.
that's cool.
Yeah. So if we think about that kaleidoscope and how two buyers might be looking through that device at the same resin market, it's plausible that they could tell two completely different stories. When you hear a buyer explain their forecasts, what immediately tells you that they really have an understanding of the market?
Yeah, I think there's levels to this, right? And I think I could even use my own career as an example of what maybe beginner to expert looks like. And when I first started out in this role, I did kind of use one of two methods. I said, all right, well, we're either going to pay next year what we paid our last price paid in December was common, very common to do that in the industry. And I just said, I don't know, markets are efficient. Nobody knows what the price is going to be. So this is as best guess as anybody, you can come after me if you want, but like, yeah, I can't get predict the future, right? Not a great answer. Okay. So if a resin buyer were to say, price in 2026 is going to be what it was December 2025, last price paid, didn't change last year much. So it's unlikely to change this year much, questions, right? I think the room would kind of fall silent and be like, we have a lot of questions, right? So that's what maybe beginner looks like. Once you are in the resin space a year or two, right, you start to understand some of these levers that you've maybe been educated by your buyer or your seller rather. You might say something like, "Well, benzene dropped throughout 2025, which led to lower polycarbonate costs throughout the year. Benzene is trending up early this year, which it is. It's actually at 11-month highs right now, and according to the forecasts, it should remain." Maybe within 10% up or down of that range. And we also know that demand in automotive is soft, supply is ample. So we expect polycarbonate to remain stable throughout the rest of the year. Okay, pretty good. All right, we've gotten into some feedstocks now. We're able to put a little bit of a quantitative 10% collar on that. You looked at the demand side and the supply side. I would say that this is somebody who's informed and paying attention to, most of the 80%. If you were to ask somebody who's been doing this a while or who's an expert or somebody who's really eager to shine when the spotlight finally comes on them, they would say something more like, Look, 2025 saw, margin compression, along with falling feedstocks, which benefited by saving, X% year over year, in our supplier negotiation," which nice little shout out to procurement and also kind of gives some context to where you're headed. Higher energy costs due to data centers, unseasonably cold weather, and increased electrical consumption, like EVs, have led to an increased cost in benzene because oftentimes in the energy petrochemical chain, you're going towards energy or benzene. And then following that, with the weather might abate, but the macro demand is likely to stay high throughout 2026. But healthy inventories of polycarbonate and low demand appear to continue onto the macro trends through 2026 as Asia's capacity grows, and we keep an eye on SABIC's divestiture to Mutores and Akita as an opportunity where margin might come back into the the price that we're buying for polycarbonate. So now you're looking at supplier demand strategies. You save 15% on tariffs in certain global areas and ocean freight rates that keep Asian substitutes off of domestic markets and are price prohibitive at this point. So ultimately, my guidance is that our PC with the glass fill is going to stay somewhat stable, but our polycarbonate that we buy direct is probably going to error about 5% up this year. Given our price formula, 30-day lag, and quarterly change, we should see this impact in Q2, and we should expect slightly higher PC prices throughout the remainder of the year. Now you've given an answer that if this is executive review, right? I'm not suggesting that you go through that level of expertise for every single resin. I mean, you got to be kind of punchy in those things. But if somebody does call your bluff and says, "Now, I really want to know, like, tell me how we came here," that's the level of answer that good looks like.
Very few can actually go to that level, Tyler, for each of the parts of the materials and SKUs that they buy, but being able to leverage the resources within your network, and we'll talk about that more in a second here. That's what turns, it's what turns having the forecast process from, being data driven doesn't necessarily mean that there's just more data in there. it really is around, the fact that you can kind of develop that and turn it into something that can be defendable, right? With some support there. So I want to kind of key in on this next point again. Back to that data driven doesn't mean more data. And that's really difficult these days where there seems to be more and more points of data to get confused with more noise than there are signals. So back to the point about there being a story behind every one of these. What does a defensible forecast include that the data driven forecasts that are out there don't have?
I think it starts with a clear set of supply and demand levers, right? Like, I think one of the first questions you should answer is like, what are the things you're paying attention to? And to be able to provide written down on a list, these 9 things are what I'm watching. I think that's compelling place to start. Then it's at least a rudimentary understanding and an ability to storytell for each one of those levers. Knowing, I'm not saying you have to do a full Porter's 5 forces on each one of those, businesses in the petrochemical chain, but being able to say, well, as energy changes and as things become more expensive, this is the downstream effects to our own purchasing price, and being able to tell that. I think in the benzene example I just gave, right, a C-suite executive might hear all that and say, okay, well, is there anything we can do about unseasonably cold weather? Is there anything we can do about data centers being built or EVs, right? And they might come away with saying, okay, there's no action we can take to really impact those markets. But at that, executive level, they also have a connectivity to other nodes and industries that they might look at those things and have maybe their own insight or gut reaction on what's happening in those other markets, and be able to feel a little bit more confident about where things are moving. To be able to say, not just benzene traded at $3 today, but to be able to tell some of that narrative provides context for executives that almost starts to take the conversation a little bit away from, well, is it going to be a dollar this or a dollar that next quarter, and into, okay, we're really doing a good job monitoring all the markets. We're informed as we can be. And now we're going to make decisions to ride that wave. So I think some of that has to do also with putting some confidence levels on this, right? As you tell that story, there's a way to say at the end of this, if I were a betting person, how much odds would I want on this forecast being correct? And that's an opportunity to say, look, we've looked at everything. And even so, this is a very dynamic market. My confidence rating on this is about a 7. I think that's as much as any executive could really ask out of somebody coming up with a commodity forecast.
And in larger organizations, Tyler, the ability to validate the forecast and the perspective with a cross functional viewpoint, that is something that makes these forecasts less about, in this example, Tyler Wheeler, this is what I say, but become business forecasts that a lot of the other departments that have inputs that are related to your forecasts get a chance to be included. I want to double click on that, maybe with an example from your past in the freight world.
Yeah, certainly in the freight world, and then in the finished goods purchasing world as well. Some really large companies, you're a raw materials buyer, but there's also lots of finished good or finished components or even unfinished component buyers in your group. And one of the things that you can do is you can take an opportunity to network with those folks. And a mentor of mine once told me to network about the work. Right. So sometimes people think networking is calling somebody up and saying, like, how's your kids or where'd you go on vacation? And it can be. I mean, no reason not to be personal. But also, like, if you call your freight department and you say, hey, I'm building a forecast for my resin, and part of that is freight. I have some freight rate quotes from my suppliers. I wanted to double check that against what you see in the marketplace. Is there an opportunity to negotiate this? Or is this potential increase that the supplier has come forth with, is that the same thing that you're seeing on your side? And that gives you an opportunity to include others in your forecasting process. By no means to share responsibility or accountability, but instead to just make use of all of that talent that you have at the company. And when it comes time to present your forecast, if an executive drills down and says, well, how do you know freight's going to stay the same? And it's like, well, I talked with Sarah in freight and we came up with this together, and she provided her input as well. So then your forecast really stops being a spreadsheet that you have to defend and more starts being like, this is how our company sees things moving. And also, Sarah's not just providing a data point, she's providing context. She's an expert in her freight field. So having that, I think, only more bolsters the end product that you're delivering.
And the other thing that will allow is for you to be perceived to be that person that is interacting and collaborating within the company, which most companies that I've seen these this day and age, Tyler, in the corporate world that really value that, right? To maximize the utilization of resources. So it'll make you look good, right? Promotional opportunities are there, which never hurts, especially in this environment. One place that we see forecasts break down are when teams treat everything they see and they're all the signals the same, right? Of all the same value. And we know that they're not, they can't be. The ones that actually move price, which ones are those, Tyler? And which ones tend to create noise and overreaction?
Yeah, kind of back to what I said earlier about how resin buyers have sort of two fronts that they have to fight on here. It's the one that they should be paying the closest attention to is going to be the petrochemical value chain, supply disruptions in the field, which can often have the most catastrophic effect on pricing, and then overall demand. Right, I think that those three things are going to get you 80% of the way there on your forecast. I think that there's a lot of stories that we get told, right? Like, I mean, Michael, just a couple weeks ago, you're in the Texas area. We were only talking about the winter. What was it? Winter storm?
Wi-
What?
Winter Storm Fern.
Fern,
Yep.
that's right, Winter Storm Fern. A lot of the folks in the resin buying space have, nightmares still about Winter Storm Uri, and when we saw this cold front coming through, that was the first thing I know a lot of folks and my friends thought about was, "How bad is this gonna be?" Well, it turns out that that created a lot of conversations, it dominated a lot of our calls, and yet, very minimal impact in the industry, right? We've had other things happen since then, force majeure due to a mechanical problem that's going to have way more impact on the industry than that storm did. So I think people who had a forecast were asked, "Hey, how is this going to change?" And I think that you could spend a lot of time spinning your wheels on weather.com to ultimately just come through with it didn't change, right? It's going to stay the same. So I think that those news stories, weather events, global geopolitical events, right? What OPEC's doing with their oil reserves and man, I mean, Maduro getting kidnapped out of Venezuela. I mean, like that's the kind of stuff that I think really creates a lot of noise and a lot of questions. And you want to kind of throw back and say, is our forecast still upholding? And you can confidently say, yes, we're paying attention to all nine of the levers. None of them have fundamentally changed, especially not the petrochemical chain, which is what we value is the highest signal to what's going to happen in the forecast.
Another thing that makes this all pretty tricky, Tyler, is these markets don't move linearly. Things happen that counteract each other. What are the biggest reasons that you see forecasts fail, even when they're paying attention to those signals that you just mentioned?
Yeah, so a lot of that comes down to, I mean, really some black swan events in the market, and they're starting to be so popular. It's like where are the white swans, like
Yeah.
over the last 5 years with all that we've had. I don't need to list them all, but it feels like things, 2025, I would say was the year of like tariffs, right? That just threw a wrench into everybody's forecast for a while there. We were having to redo them weekly based on Twitter announcements, which was a whole different challenge. But I think that's one major mover. But another one is that the timing, right? Like you can see right now in benzene, it's trending up. It's at 11-month highs. It started off quarter one higher. If you're an engineered resin buyer, you're moving quarterly. You can say with a pretty high degree of confidence that looking forward, maybe into Q1, there's going to be at least an attempt for a price adjustment in polycarbonate. But how that moves through and where the end of Q1 finishes and what that means dynamically for your set price or your average for Q1, that can change. And with a 30-day lag and inventory lags, that can just really shift, I think, the target a little bit in resins as well. So there's a timing aspect to markets and inventory that oftentimes need a deeper level of explanation. And then also, like suppliers don't behave just purely cost based, right? Like we can have all this great information, but maybe your salesperson likes to play their cards close to the chest. And when you went to go ask, "Hey, do I have a price increase coming this year?" They said, "Absolutely not, Tyler. It's not coming, Tyler. Everything's good, Tyler." And then all of a sudden in February, there it is, just laid at your feet, and now you're back-footed, right? That happens all the time. So those are just a couple of the things that can throw a forecast off, and probably over the last few years, those would be the biggest, certainly that I experienced.
So we talked a lot about, forecasts, and I want to talk about turning this into action, Tyler. I mentioned that a lot of folks are thinking about the forecast as that other F word, right? You do it once a year, you kind of put it away and don't touch it again. And the process just feels onerous and challenging. A forecast that doesn't change decisions on an ongoing basis within a business is, let's face it, it's just a fancy PowerPoint slide. How do the best teams out there actually use forecasts to take action, right? Timing buys, locking in price, managing risk. I'm sure you've got others, Tyler.
Yeah, I would say so. I guess the key point I would want people to take away from this one is as the forecast change, to keep the updates to your changing forecast localized to one of the 9 procurement drivers. And this starts with when you build the forecast and you provide it, getting stakeholder buy-in and stakeholder alignment that you say, look, these are the 9 levers. Like finance, leadership. You want to add a 10th? Is there something else you'd like me to monitor in this? And as you do that and you say, this is what we'll be paying attention to, and you stack hands on it, then when your price change and you have to go back and explain it, you want to localize what happened and say, I'm monitoring all 9 of these things, but it's really tariffs that changed this, right? So let's stay focused on tariffs and what we're going to do about it, right? I think resin buyers that forecast when something changes and they just say, okay, well, looks like we're going to spend the rest of the year up 5% or up 10% because we couldn't avoid this price increase. I think that causes questions, and that leadership says, well, which one of those 9, drivers failed? And I just recently, I was helping a customer fight back against a price increase, and the price increase said, we're going to go up by X% because of higher energy costs, higher labor, and higher feedstock costs. Okay, so we pull up the feedstock costs on Resin Smart. Those actually went down over the last year. Energy costs, okay, energy was a little bit higher in 2025, and then like labor. I don't know exactly how much their labor costs supposedly went up, but I know that it doesn't take a ton of people to run a resin plant. It kind of was like, which one of those levers are we justifying? And let's put it back on the supplier to say, it's this one for sure. And here's how we can support it either with data. And I think that approach of getting really specific with your seller on what changed and why are we taking that price increase gives you leverage in negotiations. And I'm curious from the seller side, Michael, were the resin buyers that tried to pin you down on like explaining which one of those on a generic increase, like were they successful or more successful than others?
I'll tell you, Tyler, that the folks that were referencing specific data sets that could be verified, either government data or third party data on labor rates or a contraction PMI, right? That was always the way to get better outcomes when we would put a genericized price increase letter in the market citing just higher level variables. We see more and more these days that the producers are getting less and less detailed with their price increase announcements. I saw one the other day and I almost laughed out loud because it was literally 2 sentences and it just cited the overall nature of the market. Being able to push back with those specific examples uh, is how you win and how you achieve these better outcomes, Tyler, without a doubt. So let's talk a little bit about traditional forecasting tools. When you go to develop a forecast as a buyer, you may have access to resources within your company. But there's some media outlets. There's certainly your own personal networks that you built. And there are other traditional forecasting tools, the alphabet companies that provide information to the market. And a lot of those are really great at showing numbers, but really bad at explaining them. Where do traditional tools fail first when the market starts to become fast moving, as it seems to get faster every day?
Yeah, I mean, I was just thinking about this, Michael, about how there's no such thing as a perfect resin forecast for your company or in general, right? We know that they're not going to be accurate because we believe in modern, economic theory and efficient markets, right? So unless you're cheating or something that absolutely nobody else does, there's no way to actually predict and get ahead. So how much would you pay for a resin forecast then? Like a lot? How good is one forecast versus the next, right? Because they're all just data points. So I think that's where it really comes down to it's a static view of a changing market that is, has a lot of forecasting methodology behind it. But how accurate is it really going to be and how useful can it be? My answer would be only to the extent that you, as a resin buyer, can explain it. only to the extent that you are able to contextualize it for your leadership. So is one forecast versus another forecast versus another, which one of these two leading indexes or which one of these, offshoots or the guy on Twitter, who has the best forecast? It's like, well, the best forecast is the one that can truly be contextualized, explained, and is actionable. So something that has a very clear link between the signals and the decisions and the 9 procurement drivers.
And the beauty of that, Tyler, is here at the Resin Smart, powered by RTI team, we're building these forecasts on behalf of our clients day in and day out and helping folks pay attention to those 9 levers, the ones that make sense for their business. I'm going to pop open the Resin Smart AI, our front end site. Looks like it's coming through okay. Tyler, can you give me a thumbs up that you can
Looks
see
good.
it? Fantastic. So I know we've got a combination of existing Resin Smart by RTI clients as well as future clients on the line here. But if you log into the platform or your credentials, if you're an existing client, you can get access to our forecast right here. Let's just, for the sake of an example, talk a little bit about polypropylene. You can see right here that we help our clients not only with the numbers, the raw insights on the right side, the signals that you should be paying attention to in the polypropylene market, but you can get a sense as to what you can expect in homopolymer, copolymer, and random copolymer. When we did this in quarter 4, we were projecting quarter 1's increase to happen, right? And it was due to some of the key signals, Tyler, polymer grade propylene being first on that list, we pay attention to with the polypropylene market and with those assets tightening up, coming offline. They're historically unreliable when they come back on. And so, we were at the bottom and we knew it was going to come back up. We're going to be adjusting this forecast here at the end of this quarter to take into account all of the factors, all those 9 levers, everything that changes between now and then. And if you want a perspective from somebody that is in this market day in and day out on both spot and contract prices, this is where you can come to get it. Now, if you wanted to dive in deeper from an analyst level into any of these 9 factors, we can simply do that, right? And I encourage you to do so, to trust but verify the information that you're getting, either from your suppliers or from the market in general. You can dive into the market intel section of Resin Smart and double click on the particular component that matters to you, right? Like, let's talk about feedstocks. I had mentioned PGP. We've got that here on the screen here and in the moving average. We can also look at rates, operating rates versus demand rates. Those are the 2 other levers. We've got that information here. Tyler, I know you wanted to point out something specific in this section as well.
Yeah, just maybe the demand, production, and capacity. But really, I look at it like this. This is like reading your textbook at a graduate level, right? Like it's not a compelling novel. It's a lot of data, right? I think in the price forecasting and particularly in the monthly snapshot that we have, that's more your short story. This is really keeping an eye on the 9 levers exactly with context and with confidence that we can use this data and we can present it visually and compelling and easy to understand, right? That's how you can start to contextualize this stuff. Sometimes I think resin intelligence, uh, it's like making pad thai at home, right? Like you can make pad thai at home for sure, but at least it'll take more time. It'll be more expensive. You'll buy ingredients you'll only use once, and then at least it won't taste as good as the restaurant. So I think you can get a lot of this information from signing up for the dozens or so, industry reports that we do. You can make this, you can DIY resin intelligence this, but it's not going to be the restaurant pad thai. That's where I think Resin Smart really excels in not just being another forecast, but one with context and confidence.
I love that example. It's also my wife's favorite dish when we order Thai food and one that I haven't had the courage to do on my own. Certainly something I lean into a great restaurant to help us take care of that within our household. So with that said, we've reached the end of our pre-prepared content. I think just in closing, a couple thoughts for myself, and I know Tyler, you're itching to get back in there. I think the main message is that no one can predict price movements on the raw numbers perfectly. Unless you've got access to information that somebody else doesn't have, it's just never going to happen. The advantages are the teams that build processes that help them see the signals versus the noise and see them as early as they can, and then be able to provide that understanding, and the deeper and more customized that that understanding can be applied to your business, which you as procurement professionals are best suited to do. And surround yourself with resources and teams like Resin Smart that can help you explain those decisions with confidence. You're going to be in great shape. Tyler?
Yeah, I just think that every year when it's time to do forecasting, when at the start of my career, I always thought about it like, ah, great. Now I got my day job I got to do, and I got all these suppliers I got to track down. I have all this stuff going on, and now I also have to like whiz up a forecast. I look at it differently now. I think it's an opportunity to every single year come to the table prepared and to do so in a way that provides confidence to leadership that look, I've worked cross functionally. I've made other champions internally for what this forecast is going to look like, maybe even made a new colleague friend, and I'm able to confidently express something that shouldn't be very confident, right? This is a forecast that's going to change, but also I've done the work. I've been cross collaborative across the organization, and I'm prepared to defend it this year and rebuild it next year. So I get a little excited about resin forecasts. I think that might make me the odd one here, but so be it.
I think it's another reason we love you, Tyler, getting passionate about resin forecasts. This is the way, as they say. With that said, if you are interested in exploring this further hands-on, I did drop in the chat a free trial link. If you're not currently a customer, you will need to ping me. Just drop me a quick email, say forecast. I'll have to enable that view for you for that trial period. Just drop me a quick email for that. If you'd like to see a demo, encourage you resinsmart.ai. You can request one there. And if not, and this is the extent at which we engage with each other, I really hope that you left this conversation with a better framework for how to think about resin forecasts than you had before. And we're always here to talk with you through that and help you get better every day in resin procurement. With that said, I hit it almost directly on the nose with 47 minutes. What questions do we have from the group? It looks like we've had a couple come in that I'll start with, but if you have questions, please feel free to drop them in the chat. So, the first question that we have here is, what are some of the data sources for your 9 levers of procurement? Now, that's a fantastic question. We certainly acknowledge that there are many, many places to go get this information. And I love Tyler's metaphor about pad thai because there's lots of ingredients for pad thai that you could go out and buy and put this together yourself. Some of those are ICIS, Argus, Platts, S&P Global. There's the CMA, or I guess now IHS folks that provide intel on the market, just on terms of polymer pricing. There's, if we think about inventory, we've got American Chemistry Council for a lot of resins. Now, not every resin, PET as an example, right, becomes very challenging to get inventory numbers on. There's a bunch of others, World Trade Organization, the EIA, the Energy Information Administration provides forecasts for particular feedstocks. I could go on, right? Ports, right? The trade data, these are all items that you could go out and build yourself, or you could come here to Resin Smart by RTI, where we're providing a lot of that through the platform and a lot of that through the combination of our team, right? Either on the platform itself or with folks like Tyler's. I'm not sure if anything that I missed, because there's certainly
No,
a
I
lot
I
that
think
we're.
that's true. I just think it's one of those things that before I got into global resin procurement, I would see like, oh, global housing or domestic housing starts are down. And I'm like, well, I already own a house and not in the market. So what do I care? Right. It's like, well, now when I hear that, I'm like, the PVC guys don't like to hear that. Like, it's like all those little pieces of data that would just, randomly come through my perusing of the news. It was like, all right, automotive isn't doing too well. It's like, well, I already have a car, so what do I care? Well, now I realize that every one of those reports has some type of an impact in the resin market. So it's almost like once you see it, you can't unsee it.
That's a good. I like that analogy. We had another question come in. I appreciate the brave soul that asked this one. I'm going to direct you to this one, Tyler. When
Great.
should you be proactive about explaining when the forecast misses to your finance, specifically your finance leadership? It's almost like CFOs get a bad rap, Tyler. I don't know.
Well, yeah, that's crazy. Who could say? I mean, they want all the best information and they want it yesterday. I would say, man, when your confidence levels around 80 to 90% is when I would share it. I think like if you're we can anticipate some type of a price nomination in polycarbonate, moving forward the next 2 months. Right now, I'm only about 70% sure that that's coming. So I feel a little bit like uh upward pressure, but I'm monitoring it. I don't want to create noise for finance yet. But it's getting more and more likely. So as soon as we see that first, announcement kind of go up, we know, hey, there's going to be some movement. Now it's up to 90%. Hey, now it's time to let finance know. So you want to get them informed as early as possible, but not at the cost of creating noise, because they're going to stop having, confidence in you if you're chicken little and the sky is falling every time you catch wind of one of these nine levers kind of changing ways. So I would wait till about 90%. 80, 90% confidence interval to address it with finance.
That's great, Tyler. We had another great question come in. How much value are you putting in historical data when you are putting these together? For example, how much do you use previous years where there have been significant disruptions, those black swans? How do you use that when you are forecasting current markets?
If you look at most markets, as in markets today, and you like map them all on one line graph, it would look like Kilimanjaro or something. It'd be like from 2018, 2019, pretty flat, and then like up, peak, and then like kind of continuously down to about where we are today. So when I look at and that's just going back, let's just call it 11 years or so, or not even 10 years or so. Going back prior to that, I think can be misleading because efficiencies in production have changed, cost structures for the polymers have changed, how much margin is in there has changed. So you're kind of I don't know, comparing a little bit like apples to peanut butter if you're, on looking too far historically. So I think if you go back to right around 2019 to today, I think then you capture the crazy black swan events and you capture the update and more efficient productions of polymers. So I think there's diminishing returns before, let's say 2018, diminishing returns to look backwards. I think, yeah, I think that looking at Winter Storm Uri and COVID, like the post-COVID supply chain crinkle, right? I think that tells you about the dynamics, but I really struggle to see us getting in something that is that industry wide and that dynamic for a while. I think we could see something like that maybe if a key asset in North America that produced a ton of a specific resin went down, maybe we'd see something like that. But the production in China only continues to grow, and domestically we seem to be well supplied. So it's kind of hard for me right now with the macroeconomics of how much supply there is and how low demand is to look back at when things were really out of wonk and be able to like how do you put a dampener on that for this forecast? Or even how do you know, if you were to put something in there like, "Oh, I'm expecting a bit of a catastrophic event in Q2," someone's gonna be like, "Okay, well, what kind of catastrophic event," right? Or the collars that are on that seem a little bit more difficult to defend. Awesome question. Although I guess I would say maybe if you had like a key force majeure in an industry, could you like do a backwards regression to see how much that is? I mean, yeah, depending on the polymer, there's a different range, somewhere between 5 to 10 cents, depending on the industry, all the way up to maybe 15. But yeah, that I think that's an interesting question to answer, though. Of okay, well, what if something went wrong here? How bad could it get?
Yeah, the thing that I think about there, Tyler, just that makes that a little challenging. If I think about polyethylene specifically, um, there's been so much to your point about capacity build, not only domestically but in Asia, that there's so much more polyethylene being produced globally now that is not hasn't seen the corresponding demand, at least in the last few months, and certainly, going back a little further than that, hasn't seen demand catch up to it. So it would be like comparing different fruits rather than different shades of apples.
Yeah, good question though.
Okay. Well, I don't see any other questions here, and We are almost up against the time here. So, with that, we'll go ahead and conclude the session. We'll give everybody a recording as well as a copy of the transcript. And if you do have any questions, if you're reflecting on this and thinking through, you know, forecast, the one that I put together, you're getting ready to change it, reach out to us. We're happy to help you kind of think through that in the right way. And if you're interested in adding our forecast to your process, we'd be happy to talk about that. Just reach out to us after today. So with that said, thank you again. Have a great rest of the week and buy well out there.